On this episode of Taking Stock, do you pay your car or home insurance monthly? Well, if you do, that may no longer be an option soon. You'll have to find the full year's payment up front. And that's because the Financial Services Commission, FSC, has reportedly signaled that it wants to ban insurance premium financing. We'll hear more from Managing Director at BCIC Insurance, Peter Levy.
What is it that's driving the regulator to take this view? Specifically, what behavior are they trying to prevent? And let's stamp out that behavior without, as I say, eliminating the whole structure of premium financing.
And the analysts weigh in on the latest market developments. The government of Jamaica has announced 7 no-movement days over the next 3 weeks. Many businesses stand to lose a significant portion of their revenue.
Fast food place, the cinemas, the places that people must go to.
Transportation industry, the taxi men are not going to be happy.
They are not going to be happy. You see, so those really are impacted. And I can understand that they're not happy. There's going to be some shortfall in revenue, and their ability to recover is key.
The jump in food prices has pushed inflation to its highest in a single month for almost 7 years, according to STATIN.
If you're having little to no business activity, and yourself, like bills and dollars going in one direction, in a sense, if you know commerce, then you might look at deflation because businesses just might close.
And overseas, the Taliban has retaken Afghanistan. How is that affecting global markets?
One of the main things that happens when you have any form of unrest like this, and to that extent, it creates a lot of investor uncertainty. Because of that, you're going to see the financial markets falling off because people are afraid to invest the money out of fear of not knowing what the future will hold.
I'm Kalila Reynolds, and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to my website, KalilaReynolds.com/newsletter to get my newsletter straight to your inbox twice a week. You can click the link up here or in the description box below. Now come on, let's get this money.
But first, here's what's hot. Brought to you by Jamaica Money Market Brokers, your best interest at heart. The National Commercial Bank Financial Group has extended its bond offer to September 9. The offer, which opened on August 13, was initially scheduled to close on September 3. However, the extension was granted in light of the 7 no-movement days announced by the government recently to curb the surge in COVID-19 cases. NCBFG's bond is expected to be listed under the JSE private bond market. The bond will mature in 3 years and pay 6% interest per year. Interest will be paid twice a year. The minimum investment is 100,000 Jamaican dollars. NCB Financial Group says the funds from the bond will be used to refinance existing debt and reprofile the group's liabilities. Meanwhile, NCB says it will convert 6 more locations to digital branches starting October 1. These include the branches on Knutsford Boulevard in New Kingston, Portmore, Bay West in St. James, Falmouth, and Christiana in Manchester. The NCB branch in Port Maria, St. Mary, will also be converted to a digital branch in November following the completion of a new branch office. The bank says the changes are part of the new phase of its branch modernization program. NCB said customers can still conduct a range of transactions at the digital branches, including JMD cash and check transactions, international wire transfers, US Visa fee payments, account opening, and credit card and loan applications. Special arrangements have been made for special needs groups. The Bank of Jamaica BOJ could start raising interest rates as early as next month as it moves to contain inflation. Last week, the bank's Monetary Policy Committee decided to hold interest rates at the historic low of 0.5%. However, in a subsequent press release, it noted that it would be tightening monetary policy based on near-term concerns about inflation. The bank said it will implement other measures aimed at containing the amount of Jamaican dollar it issues into the economy and also seek to ensure that movements in the exchange rate do not threaten the inflation target. The meeting to consider these measures is set for late September, with the announcement on the decision scheduled for September 30. Meanwhile, in July, the price of goods and services rose the highest in a single month since 2014. According to the Statistical Institute of Jamaica, STATIN, inflation in July was 1.5%. This was largely due to a 2% increase in food prices. Inflation was also impacted by high electricity, sewage, and water rates. Higher toll charges also led to an almost 1% increase in the transport sector, while higher prices for meals contributed to a 3% increase in the restaurant and accommodation services division. The 12-month inflation rate up to July now stands at 5.3%. It will cost the Jamaican government at least $171 million to fix roads and infrastructure damaged by Tropical Storm Grace last week. Prime Minister Andrew Holness disclosed the preliminary estimate at a press conference last week. The figure is based on assessments by the National Works Agency (NWA). 6 parishes were badly damaged, including Kingston, St. Andrew, St. Thomas, Portland, St. Mary, and Clarendon. Several communities and close to 200 roads were flooded. The Prime Minister said money would be budgeted to fix damaged roads and infrastructure. And Jamaica has been approved to access a further $60,000 via WePay's Digital Payments Transformation Fund. The payment provider had created the fund at the onset of the pandemic for the advancement of the use of technology within the region. WePay Caribbean committed $1 million to the fund and made it accessible to governments, state entities, NGOs, and fintech companies. The fund has been used in 10 payment digitization projects across 5 countries. To date, WePay Jamaica has accessed $160,000 from the fund. The latest project set to gain access is a digital grant involving a St. Elizabeth Member of Parliament, Food for the Poor, WePay Jamaica, the Progressive Group, and Petcom. Meanwhile, WePay Jamaica will also be partnering with the Bounty Foundation, the Progressive Group, and JMMB to distribute a COVID-19 relief grant to needy persons island-wide using WePay's digital fiat or QR code technology. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
And when we come back, there's a move afoot to ban the ability to pay monthly installments on car and home insurance. But why? We'll find out more. Hey moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money. This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. Car insurance is expensive. It's just one of those big annual payments that you know you have to plan and save up for. So many people opt to pay in monthly installments with interest. This is called insurance premium financing. But the Financial Services Commission, FSC, which regulates insurance companies, reportedly wants to ban this practice. Joining us now to discuss is Managing Director at British Caribbean Insurance Company, BCIC, Peter Levy. We also reached out to the FSC to participate in this program, but we have yet to receive a response. Peter, welcome to the show. Glad to have you.
Hi, thank you very much for having me. It's a pleasure to be here.
So this is a very interesting situation, but let's start by, first of all, explaining what is insurance premium financing.
Okay, well, I'll try and give it a simple version, which insurance companies are not famous for being able to do, but I'll do my best. So insurance premium financing is a way for customers, policyholders of insurance to pay the premiums over a longer period of time so that they don't have to find the annual premium upfront at the beginning of the policy period, which can be quite burdensome. And so it's a type of loan really where the amount of the premium, let's say the premium is $60,000 for the year. Either a lending a finance company or the insurance company itself will finance that premium. So they'll take the $60,000 and they'll lend it to the policyholder, but he won't actually receive the cash. The insurance company will get paid that money, and then the policyholder will have to pay $5,000 a month over the next 12 months to pay back for the loan of the insurance premium.
Plus some interest, so it wouldn't be exactly
plus some interest. You're right. Yeah. I was trying to keep it simple, but yeah, there's an interest charge attached to it, as with any loan. Typically, you're talking about kind of 7, 8 to 10 or so % interest, depending on the duration of the loan and the amount involved. So as consumer loans go, it's not all that high price to pay. It's certainly cheaper than putting it on your credit card, for instance, and making payments to your credit card. Normally, credit card interest is somewhere in the region of 40%. So it's a pretty good option for people. And what happens is, if the security for the loan is in fact the unexpired portion of the policy, and that's where it can get a little tricky for people. So basically, going back to that example, you've borrowed $60,000. It's gone to the insurance company to pay for your insurance for your car. You've paid the first payment, you've paid the second payment, and then you miss the third payment. After a grace period, which typically might be 5 to 7 to maybe 10 days, if you aren't able to make an arrangement to the satisfaction of the lender, then they have the right to cancel the policy, to instruct the insurance company to cancel the policy. And then there's a refund which comes off of the policy, which goes to the lender. So that's where the lender gets his money back safely, and you then have to go and secure insurance again. Now, you've only paid for what you've received, which is 2 or 3 months. So you're not being significantly disadvantaged as a policyholder, but you have to honor your obligations to pay the premium. Otherwise, you're going to lose your insurance coverage. So that's really the way it works. And yeah, so let me just leave it there for now, and you can ask me any questions if there's anything that isn't clear about that.
Okay, so when people choose to pay in monthly installments, what they're really doing is actually taking a loan, sometimes from the insurance company. For example, they're at BCIC, do offer that option, and I have exercised that option in the past. And then, but not all insurance companies offer this option. So what would people do in that case?
Right, so there are specialist premium finance companies that offer financing for customers, no matter where you're insured. There are 3 or 4 of them who might offer it for private individuals, but a lot of them have kind of a minimum below which they will not do a premium financing deal, because the cost of admin is just going to eat up all of the profits. So what we find is that it's readily available for commercial policyholders for larger premiums, but the supply of premium financing for the individual, whether it's an individual kind of just insuring his private car, whether third party or comprehensively, or like an individual taxi owner or whatever, the supply of premium financing, or the availability of premium financing for that smaller customer has been kind of reducing and diminishing. The companies that are in this business prefer to do bigger deals with higher sticker prices attached to them.
So there are quite a number of people who take advantage of this. Like I said, I've done it in the past, and I know for people who can't afford that $60,000, $70,000, $80,000 up front, it is very affordable to be able to have this option. So why is there a proposal now for this to be eliminated? What's the reason?
Yeah, I mean, first of all, in respect to the popularity, you're absolutely right. I mean, we have BCIC last year, which of course it was really important in the kind of pandemic times for people to have kind of options. People were stretched. There wasn't as much money coming in, and we did something like 20,000 premium finance deals last year. So 20,000 policyholders who chose that option.
Out of how many?
We'll have somewhere around 100,000 policies in force.
So about 20% of your sales.
Yeah, and it's been growing year on year. And we've had people tell us. We had a taxi operator who told us that when he looked at, he had been in the habit of getting a forged certificate to satisfy the transport authority and the tax authorities and the police. And when he heard about our premium financing terms, he realized that what he was paying for that first certificate is about the same as the monthly payment.
Really?
So he was like,
my
well, I might
goodness.
as well do it legit,
Yeah,
and I think that's a powerful statement, because
it is.
it goes to show, like, he couldn't find the lump sum. Taxes, they live day to day, they earn day to day, and it's hard for them to accumulate enough cash to pay a significant insurance premium. So this was a perfect solution. But the point is, without this solution, there was a taxi out there which actually didn't have insurance. The passengers weren't protected. Other people on the road that the taxi driver might have collided with weren't protected. And because we had a solution which matched the needs of that customer, you had a whole bunch of people who were protected from something bad happening.
Right.
So it to me, it's a very important kind of means of inclusion and getting more people protected than would be the case without it. Why there's a sentiment with the regulators that there's something wrong with it, I really can't explain, because they haven't really been able to explain it to me in a way that I understand. I think the important, with all insurance, there's a kind of gap in knowledge between the ordinary customer and the insurance company, which we have to be aware of, and we have to be careful to, first of all, not to take advantage of people and exploit their lack of knowledge or experience. And then also we have a kind of affirmative duty to go out of our way to explain things and to make things clear to customers. And so if the regulator thinks that that's not being done enough by people who offer premium financing, whether insurance companies or independent financing companies, then I think we can talk about having some rules in place, having some guidelines about how the documentation needs to look and what needs to be in there to make customers comfortable with and familiar with the terms of what they're agreeing to. That to me would always be a better option than just saying that it's something that insurance companies shouldn't do at all, because I think you're throwing the baby out with the bathwater there. And if there are problems in the way that it's done, we can solve those problems if we work together.
So would the financing companies still be able to do it? It's only the insurance companies that wouldn't?
We've had slightly conflicting information from the regulators, the FSC, on that. Initially, one of the things they were saying was that you shouldn't have the insurance companies won't be allowed to cancel an insurance policy on the basis of another agreement, which is the premium finance agreement, on the strength of that once the premium is paid in full, the insurance company shouldn't be allowed to cancel the policy. That would impact every lender, whether or not it's a insurance company itself or it's an independent financing company, because that means we couldn't use the policy as the security for the loan, which means it would be an unsecured loan and would be up in that 40-50% interest rate region. So although they have said entities connected to insurance companies are the main focus, they have also indicated some discomfort with that aspect of the arrangement. And as I say, that would affect independent lenders as well.
Still trying to understand why. And I should mention here that we did reach out to the FSC for them to participate in this program so we could get their side of the story, because I'm just really trying to understand, well, why would such a move be taken? So there has been some communication between the insurance companies and the FSC, but what I gather from you is that it's been not great.
Well, yeah, I'm still not fully understanding their motivation. I think they're focusing in on what might go wrong. And maybe there have been a couple of instances where something did go wrong, but they're not aware of all the good that occurs as a result of this arrangement. I mean, it's essentially it's essentially just a way for people to manage their expenses a little bit better. And it's I don't think that they recognize the potential impact on the insurance market and on the fact that potentially tens of thousands of people could either be entirely unprotected by not having insurance, or have gaps in their insurance cover, because they don't have the money at the time, so they have to wait until they collect the money. Whether or not they're actually out on the road driving their vehicles, who's to tell? Or they were going to buy less coverage because that's all they can afford. Less coverage than they really want. So they may say, well, I really want to be covered comprehensively, but I can only insure the third party right now, so I'm going to take that. So I don't think those are good outcomes for people. They're taking on more risk than they actually would want to. And there's a mechanism that has been used for decades to help people pay for that risk in a way that's more manageable. And I just think, if there are any flaws in that arrangement that need to be addressed and looked at, we're more than willing to do so. Let's look at the actual, what is it that's driving the regulator to take this view? Specifically, what behavior are they trying to prevent? And let's stamp out that behavior without, as I say, eliminating the whole structure of premium financing.
Right. So you said that this type of arrangement has been in place for decades?
Yeah, as long as I've been in the business, and you can just look at the beard and you know that that's a long time.
Oh boy. All right. So this affects, is it only car insurance that it affects?
No, people finance homeowners, all kinds of policies.
Insurance.
Yeah, absolutely.
But not health insurance though.
We're not in the health insurance. Health and life is a different business. We're not in that. So yeah, I don't think you can. I'm not sure what credit arrangements those guys offer, but obviously life insurance is a monthly payment for most people anyway. Right. So they build in the financing into the baseline of the contract, and you can choose monthly, quarterly, semi-annually, annually. And if you stop paying your policy after you've used up the cash accumulation on the policy ceases, right? It's kind of normal. If you stop paying for something, the service ends. So I really don't get what the big dislike of this arrangement. Yeah, I really don't. But
right now, anyway, it's just at the proposal stage, right? Nothing has been passed, and this is something that they have signaled they intend to do. Where are we now in the process?
Yeah, so the FSC initially, it's been quite a journey. They issued some guidelines I think it was some best practice guidelines in 2018, I think it was, that were adopted, and they did not have this kind of issue with premium financing. And then last year in August, they issued a concept paper for comment, in which they proposed to take some of those guidelines and make them into regulations, so they would have the force of law, because the guidelines are just recommendations for best practices. So now they were going to take some of those best practices and actually write them into the law. And in that document, we had this general prohibition of premium financing by insurance companies or connected entities. We've had a lot of dialogue on it. I've been on many calls with the FSC. The industry as a whole has responded with our position, and in particular, resisting and setting out our objections to that approach. But the regulators seem to be fairly resolute on the issue. The last meeting I had with them, I did put on the table that should we look at some kind of improvements to the arrangement, rather than, as I say, this nuclear option of prohibition. And they seem receptive to that, and I'm hopeful that they'll come back to the industry and say, okay, here are the specific issues that we have. How can we deal with them? So I'm still hopeful for a peaceful outcome, let's put it that way, and one that preserves the service and the availability of the service for people who really need it.
So is it up to the FSC alone to make the determination, or would they have to actually go to Parliament to get some type of law changed?
Yeah, it would require a change to the law, which has to go to Parliament. And so the Ministry of Finance, which is under which the FSC exists, they'd have to make a recommendation to the ministry, and the ministry would have to agree. So they aren't the final word, but obviously they're fairly persuasive as the regulators responsible for the insurance industry. And I would rather deal with them and have us arrive at a place of kind of mutual understanding, and where we can both get an outcome that, as I say, preserves the service for policyholders and potential policyholders, without having to get into a fight at the level of the ministry or in Parliament and stuff like
issue.
that.
Yeah, get the politicians involved.
Yeah,
rather resolve it before it comes to that. No.
Yeah, and I think notwithstanding that I don't really understand what's motivating their thinking, I do think that they have, ultimately they have the best interests of the policyholder. They're there to protect insurance consumers primarily. And I don't have any quarrel with that. But I just think in this case that we could modulate the approach somewhat to make sure that we don't do more harm than good.
Right. So, well, I hope the FSC sees this and they are able to give us a response, because like you, I'm very curious as to what the motivation is, and hoping that there can be some middle ground that's arrived upon so that the service can be preserved for customers who simply just can't afford that upfront payment. Thank you so much, Peter.
Thanks very much for having me. It's been a pleasure.
All right. So what do you think about this issue? Comment below and also take our poll. The link is in the description. Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 111 stocks traded across both the main and the junior markets of the JSE for the week ending Friday, August 20, 2021. 33 advanced, 67 declined, and 11 stayed the same. 359 million shares changed hands on the Jamaican dollar market, totaling $5.3 billion. Mayberry Jamaica equities traded the most, taking up 36% of market volume. The stock gained 20 cents to open the week at $9. Supreme Ventures traded the second highest, with people buying and selling nearly 74 million shares in the company. The stock lost 94 cents to close last week at $18.06. And Wigton Wind Farm ordinary shares rounded out the most traded, taking up nearly 7% of market volume. The stock remained unchanged to open the week at 55 cents. Now let's see who had the biggest gains. Radio Jamaica stock price rose nearly 61% to close last week at $3.50. Fesco's stock price rose nearly 32% to open this new week at $2.17. Rounding out our biggest gains, Express Catering, which gained $1.12 to open this week at $6. On the losing side now, Productive Business Solutions' 9.75% cumulative redeemable was the biggest loser for the week, down 23%. The stock closed last week at $80.50. Portland JSX was second on the list, its stock price down 23% this week. The stock opens this new week at $7.06. Rounding off the biggest losers, KLE Group, which lost nearly 23%, to close last week at 95 cents. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers.
Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined now by equity trader at JMMB, Clive Charlton. Business writer at the Observer newspaper, David Rose, and financial coach, founder, and CEO of Profit Jumpstarter, Keisha Bailey. Hi, everyone. David, Clive, Keisha. We're bound for a pretty interesting discussion today, huh?
Yes. Morning, all.
Great to be here.
Let's start on the global front. I'm sure that you've all been following the developments in Afghanistan. The Taliban has retaken the country. For somebody like me who grew up, well, my entire adult life has been the post 9/11 era. 9/11 happened just before I went off to college in New York. I can't believe it's been 20 years, and it feels like 20 years coming right back to day one, starting from scratch. And now we need to look, as people who are analyzing the business environment, the global environment, we need to take a look and contemplate, okay, how might this massive international development affect global markets? So Keisha, you first, what's your perspective?
So it's been hurting my portfolio a bit because one of the all this week, because one of the main things that happens when you have any form of unrest like this, and to that extent, it creates a lot of investor uncertainty. Because of that, you're going to see the financial markets falling off because people are afraid to invest the money out of fear of not knowing what the future will hold. And so you couple that with what's happening with the Delta variant and concerns around growth. It's been a tough week in markets. The concern also with Afghanistan is that there's $1 trillion in minerals in the country. That's the big issue right now, because as we think more about green energy and green technologies becoming more mainstream, Afghanistan is very rich in these minerals. And so the unrest is constricting foreign investors from wanting to invest in the country as well. So all in all, it's been hurting investment portfolios because of increased uncertainty in the country.
Yeah, so this is a very rich region in terms of resources, in terms of physical resources indeed. Clive, what's your perspective?
Yes, Keisha is quite correct. That's the first place to start off. International commodities, oil and minerals. She said 1 trillion and maybe even more. And interestingly, the international markets, multinational corporations, having reached globally. We know there's political instability, but I think the economic part, the financial part, is what has caused this disruption in the marketplace. What we can hope for, though, is that one, the government, it's a surprise to us, the world, that they have taken over so quickly, but I'm sure there's a lot happening, and I'm sure the intelligence in these US, the Western world, must have had information as to what is happening, but as to when it came to us, kind of quick and sudden, But I would hope, though, that global international negotiation is continuing as to how the country should function, how the country can move forward. Of course, what we have seen is spots of report, not much detail. I have seen, that Russia, China, India apparently have already engaged the Taliban in some form of discussion. We know China had the International Road and Belt Program. Correct me on the name.
The Belt and Road Initiative.
Belt and Road Initiative, yes. And apparently Afghanistan is also a part of that, So they said that some form of small background discussion has already begun. So there might be some semblance of I would say stability, perhaps. But my personal take on it, my personal view, I think. Let me just put my foot in a little hot water here. If the international Western multinational corporations do not have a controlling interest or do not direct how resources are exploited in these areas, I don't know how much of a stability we can have in that region, in the market in that region, and perhaps in the global market for commodities. Yeah, that's my view. Especially if China is going to make some inroads.
And of course, when we talk commodities and the Middle East, the first thing everybody's mind goes to is oil prices. And oil prices already are not looking pretty. Right. So hold on. So is Afghanistan an oil producing country?
I'm not sure. It might have oil. I mean, it's around the region of Syria, Iran, Iraq.
Everybody around them have oil.
Right. But as Trisha
Keisha.
just said, sorry, that mineral is also a significant component of their reserves, you see. And guess what? This is what is discovered already. And chances are there's multiple more. You know, when they speak up, when it's a 1 trillion, it is what is determined and certain. So there could be even multi more.
Yeah,
and
I just Googled it and it's saying copper, gold, oil. So there is some oil, natural gas, uranium, bauxite, coal, iron, and those types of
that
minerals.
is significant, yes.
Yeah.
So it is all, it's now determined that it is very strategic, you see? Yeah.
Yeah.
And it's going to impact
It's going to be a major geopolitical issue because the countries that stand to benefit from this are not Afghanistan. And so you have something called the resource curse, where countries normally who are rich in these minerals and resources are the ones that do not benefit. And it's the international countries that come in with the foreign investment.
All the time.
Yeah. So it's going to be interesting to see how this plays out.
Yeah. I see an article here saying Taliban to reap $1 trillion in mineral wealth.
Yeah. Yeah.
But we know that the Taliban has also been part of the different type of, well, not minerals, opium and heroin trade. Opium and heroin have financed the Taliban in large part over the decades as well. So that's another source of income. It's not a legit source of income, but yeah, it's a big deal.
Income nonetheless. Yeah.
Income nonetheless, but and another reason for us to keep our eye on what is going on with Afghanistan and the global ramifications that I'm certain are going to come. So let's come locally now. So that's one development that we really need to be aware of because of the impact on possible inflation, impact on oil prices. We've been monitoring inflation locally, and STATIN has just delivered its latest results. What are they saying about inflation now, Keisha?
So inflation numbers out for July are 1.5% for the month. That's the highest single month inflation in 7 years. The higher number was in September 2014, where inflation for that month was 2%. And the main driver behind inflation for July has been food prices, specifically ground provisions, yam and banana. Those prices have gone up. I've felt that in the market. Also, housing has gone up because of higher electricity rates. People are also dining out more. That helped to push up prices, and also toll fees and oil prices help to push up the transportation index. So point-to-point inflation, 5.3%, fiscal year to date, 3.4%, and calendar year to date, 3.8%. Fairly high numbers. We'll watch to see if it's transient or not, but it's one to take note of, and we're feeling it in our pockets.
Yes.
So interesting you mentioned that dining out was up, Keisha, because now the government has announced 3 days of lockdown per week for, 3 weeks? And I hear a lot of, especially people in food service industry, complaining, not just food service, a lot of businesses are going to be severely impacted by this, with your work week cut short by almost half, because some of them won't be able, for example, gyms, you can't open. If Monday and Tuesday are no movement days, then you basically can't open Monday and Tuesday. And so Clive, what are you hearing from the business community about this latest development in terms of lockdowns under another name now?
Yes. Well, interestingly, the financial sector, from you see my logo here, right? Right. We have been preparing for JMB has always utilized technology from ever since, and has always sought to ramp up the system over the period. But I see that happening right across the board. Nearly all the financial institutions, they can now access their systems remotely, So they, I think, are more prepared to deal with it, that aspect of it. It's the real sectors, for example, the gas stations, the supermarkets, every time there's a bump up, a significant rush, so they may be able to cover their sales in a few days. But there are other areas, as you rightly said, the fast food place, the cinemas, the places that people must go to.
Transportation industry, the taxi men are not going to be happy.
They are not going to be happy. You see, so those really are impacted. And I can understand that they're not happy. There's going to be some shortfall in revenue and their ability to recover is key. But how they're going to recover is the application of technology. They have to reorganize and restructure. We have to look at our business models, and how we run businesses. I mean, that has happened a lot in the financial sector just recently, the service sector, particularly the financial sector. They really have ramped up their technological, side of business they have. But the other sectors of the economy, how ready are they and how capable are they? That's a big question.
Yeah, and there's some that work from home just isn't practical, like taxi drivers. You can't drive a taxi from home. It just doesn't work like that. There's some businesses that depend on that physical presence for that's their bread and butter. That's how they earn money. So, David, you think this is likely to lead to more inflation in the coming months? I know I'm asking a lot of you as a young analyst and journalist.
The primary key to continuous measures, you probably might see an issue in terms of, business deciding to close. And if people have money to spend, then where price increase is going to come from. And we're already seeing price increases from the international shipping costs. So last year, $2,000 to bring in a container is $20,000 now. That's because distributors themselves actually we can no longer keep these costs under control. We have to actually increase prices now. So as of yesterday, last distributors actually said, as August 23, I should say, we're going to increase our cost of some of our goods because we can't contain the cost anymore. And so we reality right now, even though you're asking, will inflation go up in the coming months? That's a very big if, because if you're having little to no business activity, and you're saying like based on dollars going in one direction in a sense, if there's no commerce, then you might look at deflation because businesses just might close.
Yeah, I really feel it for people, members of the business community, small businesses that depend on that foot traffic. I mean, you already have the entertainment industry gone, basically. Food service, but there is ends. I was telling a couple of people I know in food service that they need to register for ends like ASAP so that you still have an opportunity to at least deliver food to your customers. At least that's one technological solution that can help. But overall, a lot of people are really going to feel the effect of this with their business hours.
Services.
Right. So food and like pharmacy services, grocery items, and so on, that people would be able to deliver. So that's one solution. I also want to look at a couple of things in the market. So there is some news on the IPO front. Clive, I hear that there's a vet service provider that wants to list.
Animal Care Hospitality Service. It's a vet. It is seeking it is now doing its due diligence. That is, it's investment broker, it's going through the financials, looking at the regulatory and, the necessary compliance and regulatory thing to see how well and how best it can come public. I think the article did state who that lead investment banker is, but this is brand new. This provides diversification to the marketplace. That is not just a vet. The revenue so far indicated in that article is that they do over 200 million Jamaican dollars of gross revenue per annum. I said to people, look here, money is money. Don't say it's too small or too big. Money is money, right? And if it employs people permanently over the last 20, 30 years, then you can put it on the market. Of course, we want to know it's stable. It abides by the whole regulatory process. We want to know that it's not breaking any law or not subject to any, thing. Yeah.
And this medical service, there are other companies listed that are in medical service.
Medical, like MDS is in distribution. Exactly. Medical distribution, right? This will go into, it does animal, hospital care, one, distribution, animal products, you name it. Yes. Animals are like human beings now, right? Almost, right? And then
have one at home. Even have a human name, Bella.
Exactly.
Name like everything. People, wear clothes and everything.
Yes. They get medication, they get shots, they have toys, they have them car carrier, you name it, right? So there's a market for that, and Jamaica, our culture really has adjusted to that. Yeah, the dog provides a primary, in certain areas of protection, but there are also companions. That is important. And it's not just about pet dogs or toy dogs, if you want to call them that. It's really about maintaining an animal and ensure that animal is in the best of care. So that sells, it's a business. But there are also the test products. Now, the article didn't go deeply into what kind of testing, the test food, products, medication. It really didn't go into detail, but that looks like to me another area, of business opportunity, separate from just the animal care, right, and product. So importantly, in terms of the market, is diversification, right? Again, we have a new opportunity, a new business line, a new sector that we can put our resources into, and we can derive some income from. So that is good for the market, diversification.
Yeah. There's also another real estate company looking to list, Clive.
Yes. This is now. Well, this is Cygnus Real Estate Finance Limited. Huh?
Oh, that IPO is already out. Yeah.
Yes, it is already out. Exactly.
I thought it was something different. Yes.
Right. Well,
yes, but I'm very excited about Cygnus Real Estate Finance based on, I think these guys are just brilliant, and also based on their strategies in their approach to business. But let me hear your take on it.
Right. What I like with the Cygnus Group is that they are focused on the real productive sector. It is a finance company, yes, but their financing is on the real productive sector, small and medium size. So I think they are really aiding the economy, the small economy. That I think is important. And I said the real productive sector because guess what? The base of any economy is the real production. That is people physically moving, doing things. It's not just like me, sit down around the desk on a computer, managing money, and that is good. If the finance sector really cannot exist without the real sector, so putting resources in the real sector is important. Now, here's the thing with the Jamaican economy. We really have been in a stagnated position for the last 30 to 40 years. So I think that the ball is really in our court to grow. And I think these guys have seized the opportunity. What they have established is confidence that investors believe that they can give them their money and say, look here, do what you can with it. You're providing a service, I will get a return. So I think that is good for them. And this is called Cygnus Real Estate Finance Limited. And they were seeking to raise, over 207 shares times $4. That's probably over $1 billion Jamaican dollars so far, right? And they have several projects already, and some have begun already. You see, so I expect good things from them.
Right.
Again,
we did a couple of interviews with them a few weeks ago about it. So I that's definitely one to watch for me. Well, thank you all for joining me today.
It's understandable.
Look forward to further discussions with you. Thanks for your analysis.
Well, thank you again for having us.
Bye.
All right.
Okay, take care.
Stay tuned for a preview of this week's content.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers.
That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com/newsletter and turn on those post notifications so that you can be the first to see all of my other content. We want to help people learn more about money so we can all get this money together. So this week on Money Mondays JA, Guyana's new oil boom is set to transform that country's economy. So many are looking to invest in the South American nation. I'll tell you how you can invest on the Guyana Stock Exchange. And on Money Moves JA, can employers demand that their employees get vaccinated? We'll find out. So follow me on Instagram and Twitter, also on TikTok at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Let's get this money.
Let's get this money.